our next live stream, we are going to be going over what's happening in the bond market because something in the bond market just broke really, really badly. I have to take my sunnies off there for effect. Okay, just type 1 if you can hear me, if the mic's working fine, and we will get into today's show because things are getting absolutely wild. So first, what I'm going to do is go over what exactly happened in the market today. So let's hit the charts, everyone. So we can see here in the US, all indices, the Dow down over nearly 400 points, the S&P down, NASDAQ down nearly 2%. Bonds, I'll go ahead and bring this bond chart here. The bond market, the 10-year just hit a very, very critical level, which we'll go over in a moment. Look at this. 4.5%. So this is a very, very critical level for the bond market, and it's going to have big implications, which we'll go over in a moment. And again, they're starting to lose control. The Federal Reserve is losing control of interest rates. The cryptocurrency market sold off. Bitcoin down around 26,000. Oil, it did initially sell off earlier in the day. Thanks for that super chat, Glenn. Thanks for the support there. And gold and silver sold off a little bit earlier today as well, but it is rebounding during the Asia trading time, which is happening right now. So again, we'll go ahead to this headline here with Bloomberg. Stocks sink most in 6 months after recent run up in treasuries. So what exactly is happening in the bond market, everyone? Well, they're starting to lose control. Now, why is this happening? Well, first, there's a lot of uncertainty with what's going to happen with the US government shutdown. I'll go ahead and bring up the US debt clock here because do you know what just happened? The US debt increased, I think it was 47 or $48 billion in just 48 hours. That's right. We're going up nearly $50 billion in debt just in 48 hours. We can see here the debt is skyrocketing out of control. Seems like every other month I look at this, there's another trillion on there. And people are starting to lose faith in the US government to repay its debt. They recently had a downgrade for their credit rating. And the way the US government is going right now, they're losing a lot of credibility. They didn't have much credibility left to lose, but they are still losing more and more credibility. And imagine if you're someone lending the US government money, do you feel like you'd be more confident that they can pay it back now compared to 10 years ago? Yes, the debt was very high 10 years ago, but now with the way they're spending, they're spending, like a 16-year-old teenager that just got their first credit card. They're spending like crazy right at the time when we have rampant inflation and right at the time when the US is in a recession, even though they haven't officially declared it yet because they can just keep on changing the definition of a recession. This is very irresponsible spending. Now, again, this is all happening at the same time when a lot of other central banks that hold a lot of US treasuries, that's again, just US government bond treasuries, they just issue IOUs to repay you back with interest. But with them so indebted, a lot of people are starting to lose faith with them being able to pay it back. And I'll go ahead and bring up another chart here. This is the major foreign holders of United States treasuries. Now, Japan is number 1 with 1.1 trillion of treasuries. Now, what has Japan's central bank been doing recently? Well, they've been going from a monetary policy restrictive stance, loose stance. Now they're now starting to tighten. I'm just adjusting my screen here. They're now starting to tighten their monetary policy. Okay. Now, China. This is who I think is starting to dump the US Treasury market and the reason why treasuries and bond yields are surging. They're the second biggest holder. And I don't know if you've noticed lately or you've been living under a rock, but the relationship between the US and China hasn't been this bad in decades. Also, China is in a huge recession right now. You can't trust the data they're putting out, but a lot of the data points we do have, their economy is completely crashing. Their property sector, which makes up a third of their GDP, that's tanking. Their shadow banking industry is in collapse. So they're going to be dumping a lot of US treasuries and bonds in order to get some cash to stimulate their economy and to rebuild and bail out some of their failed financial institutions. And this is just simple supply and demand economics. The government right now is issuing more and more debt. They're issuing more and more treasuries. That's short-term US government debt between like 1 month and 1 year. So they're issuing more and more debt. Right at the same time, the Federal Reserve is selling debt, that's bonds. They're selling bonds, and all other major central banks around the world, they're scrambling for dollars, they're scrambling for cash, and they're selling too. And this is why, even though the Federal Reserve has paused lifting interest rates, we're seeing yields skyrocket here. I'll go ahead and just bring this up. That's right, 4.5%. I'll go ahead and bring up the other bond yields. Just one moment here. I'll go ahead and bring up the other bond yields. We'll go ahead and have a look at the 3 month, and we'll look at the 6 months to see what that is paying now. I'll go ahead and just load this up here, because what do you think is going to happen if, you know, you're a big institutional investor? Are you going to risk putting your money in the stock market right when stocks are at all-time highs and maybe get a return of 7-8%, or would you take the risk-free return, or pretty much risk-free return of 5.5% of putting it in a money market fund? Okay, a lot of big institutional clients are simply just going to park their money in a money market fund. So I'll go ahead, I've got it up here now. So look at this. The 6 month is now paying 5.5%. Now, again, it's not 100% risk-free. The US government defaults, well, then you're not going to get your money back. But it's the lowest risk return asset you can get in the markets right now. So I think this is going to have, this is a big reason why the market is selling off right now, because you're going to have a lot of big institutions. They're going to like, look, stocks are pretty overvalued right now, and I can get a pretty good return. It's not an amazing return, 5.5%, but at least for the short term, why there's so much uncertainty with inflation possibly surging again, which it is, and the central bank's lifting interest rates higher, well, maybe you'll just park your money in a 3 month or a 6 month and see exactly what happens, okay? So that's why we're seeing a lot of uncertainty in the markets right now. And I don't know if you guys remember, but do you remember in 2019, there was something that happened in the repo market? That was an overnight lending facility between the banks. And what happened is that market went haywire. Interest rates skyrocketed from around 2% to 12% overnight. And I think if we keep on seeing other central banks dump treasuries, the US Treasury keep on issuing more treasuries at the same time the Federal Reserve is selling treasuries, we could see something in the bond market break, especially if a big hedge fund or a big pension fund gets liquidated, like what nearly happened in the UK. Remember last year, the pension funds in the UK nearly went bust because interest rates on their bonds skyrocketed out of control. And the same thing could possibly happen in the US without immediate intervention by the Federal Reserve. The Bank of England had to immediately step in because they were hours away of getting margin called, these big, huge pension funds with your pension and retirement in it, okay? So that is exactly what's happening, everyone. Yields are skyrocketing. This is creating a lot of pain for the stock market, and this is going to lead to a lot of uncertainty. So what can we do about this? Well, in this scenario where interest rates skyrocket, everything, like I say, will be sold off: gold, silver, stocks, Bitcoin in the short term. So that's why I'm not telling you to sell all your assets right now. I'm not telling you to sell your gold, silver, Bitcoin right now. All I'm saying is you want to start building some cash on the sidelines, because in case of a black swan event where we see people get liquidated, those that have cash will be able to profit from the situation and buy things for pennies on the dollar. Now, just a few quick mentions before we wrap up the stream. I want to talk about mortgage rates just hit a 23-year high. Now, this housing market has been absolutely insane. Some areas are crashing, some areas are doing well, but look at this, nearly 7.5%, and I think we will be hitting 8%, okay? Also this, existing home sales declined for 17 of the last 19 months. Yes, this is a crash. So even though the housing market hasn't tanked yet because of record low inventory, and remember, at the same time, there's record legal migration and there's record illegal migration. So obviously, if they flood the country with 1 million illegals, well, then that's going to be a lot of demand for housing, and that could absorb some of that distressed supply that comes on the market. But if interest rates stay this high for much longer, and really what's going to be the thing that really kicks off the housing market downturn will be unemployment. If the unemployment rate skyrocketing, if unemployment rate skyrockets, even if people have their 30-year fixed rate mortgage of 3%, they'll be forced to sell, especially with property taxes increasing and insurance costs increasing as well. Because look at this, housing economist warns of 8% mortgage rates after home sales disappoint. So everyone, definitely a lot of uncertainties in the market today, especially with the bond market. What do you guys think about this? Just go ahead and let me know in the chat. I'll have a quick read of some of your questions. And is there any major news that I missed today or something you want me to react to? Just reading your comments here. TLT may be good once interest rates go above 5%. All right, everyone. Well, that's the news today. Thanks for watching. You're awesome. I'll see you all in the next video.